Hey guys, what's up, how's it going? My name is Rob and welcome back once again, and in today's video we're going to be talking all about single ETF portfolios, and I'm going to be giving you guys my #1 top rated Canadian based single ETF portfolio for all you couch potato investors out there. So before we dive in the video, I just want to say really quickly, everybody, thank you so much for everybody who supports the channel. We just finally hit 10,000 subscribers on the YouTube channel, so I really appreciate that. I just want to say thank you to everybody who watches my videos and everybody who subscribes to the channel. It really makes a big difference, and it's pretty cool to finally see the channel growing and to finally hit that 10,000 mark. It's pretty cool, and I just want to say a big thank you to everybody out there who supports the channel. Now ETFs, if you guys follow my channel, I'm a big fan of ETFs, and they're super popular right now, and they're really popular for a pretty good reason, because ETFs can just be simply bought. You know, you can go into your online brokerage, whether you use Wealthsimple like I do or use Questrade or whatever it is you use, you can simply go in there, buy the ETF with the click of a button, and it's really as easy as that. Now the cool thing about ETFs is you get lots of different types of diversification depending on the type of ETF that you buy. And in today's video, we're going to be focusing on one portfolio ETF. So these are going to be ETFs that you just literally need to buy the one ETF, and you get lots of diversification. And the cool thing about ETFs is, generally speaking, for the most part, and some of them have higher or lower fees, some of them are generally like a little bit lower than others, but for the most part, most ETFs are kind of in that lower fee range. So the cool thing about ETFs is they're really a win-win solution, and I really highly recommend them for everybody. Even if you're a beginner or a more advanced investor, I even use them inside my portfolio, and I think they're really cool. And because this is a Canadian-based investing channel, we're going to be focusing on Canadian-based all-in-one portfolio ETF. So these are going to be focused around, investing in Canadian stocks, but also like kind of global wise. These ETFs kind of invest in a little bit of everything. So we're going to be focusing on this from a Canadian perspective like usual. And the fund we're going to be focusing on today is going to be a Vanguard-based fund. But keep in mind, you can look at iShares or Bank of Montreal. There's a lot of different options out there. So you don't have to use the fund that I'm going to be talking about in today's video, but feel free to look around. There's lots of great single ETF portfolios that you guys can definitely take a peek at and kind of, customize them more to your needs depending on what you want. So the fund that we're going to be talking about today is VGRO or VGRO, which is a Vanguard-based growth-based fund. And this is one of the most popular funds I've seen around, and for a pretty good reason. It's a really, really great Canadian-based ETF that really focuses on growth and equity, and it really covers, everything you need to know when it comes to diversifying your portfolio. And with just a click of a button, you can invest into this fund and get a wide range of different stocks all around the world. So let's take a quick bit of a deeper dive inside the fund, and I'll give you guys some more information, and we'll talk about why I like this fund and why I think it's great for anybody who's looking for that one ETF portfolio. Alright, so let's take a peek at the VGRO Vanguard Growth ETF based portfolio. I'm going to be taking a kind of peek at this ETF, kind of dive in a little bit, and I'll show you guys some information about it. So here's the ticker for it. So it's VGRO on the TSX, so make sure you type that in there. It's currently trading at $32 Canadian, as you guys can see. And year to date, from 2021, it is up 10% year to date. And if we go over the past year, it's up 17%. And max since inception, it's up 31%. So this is a pretty new base fund, as you guys can see, and we'll talk about that throughout this video. But let's jump on over to the Vanguard based website, where we can actually take a bit of a deeper look inside this actual fund. So let's take a quick peek at when this fund started. So you can see this cool little graph here of how the fund has grown over time. So we can see that the fund started in January of 2018. So once again, we don't have a ton of data to work with here, but we do have a couple years. And whenever you don't have a ton of data to look at, the most important thing is to check out the holdings and kind of take a peek at that. So that's what we're going to kind of focus on in this video. But like I mentioned earlier, the fee for this fund is, the fee for this fund is kind of around that 0.25% range. So this is the cool thing I love about Vanguard, is they have really, really cheap fees, as you guys can see. A 0.25% MER is super cheap. That's kind of basically the fee that you're paying. So if you compare that to a robo-advisor that might charge you like 0.5% or 0.4% plus the ETF fees, this is really a good steal of a deal. So the fees are super low, and you're definitely going to do good with that. The yield of the actual fund is 1.73%, and it's relatively low. And this is because this is like I mentioned, it's a growth-based ETF, and it's kind of in the name as well. It's a Vanguard growth-based international fund. So you're focusing on growth-based stocks across the world with a little bit of dividend yield as well. And the distribution is quarterly, as you guys can see here. So you'll be getting that dividend distributed to you every like 4 months or so. And when it comes to assessing total returns, this is always super important to do with these funds. And the cool thing I like about Vanguard is you can actually check out the annual return, and this will kind of show you guys the return year by year. And this is important to compare to different funds. So, and here's the thing where these kind of portfolios are going to differ for somebody like myself who focuses more on Canadian and US stocks. You'll see that with these more globalized ETFs, you kind of get more of a lower return on some years, but overall it kind of balances out at the end, and you might be sacrificing a tiny bit of growth by picking a more internationally diversified portfolio, but it's definitely more safer. And during times of, like, let's say there's certain market crashes in certain sectors or certain countries have a hard time, you're going to get that nice kind of continually, you're going to get that nice rise that's going to go over time. So in the year 2019, the total return by this fund was 17%, which is pretty solid. In 2020, it was 10%. So once again, because this is a diversified ETF, you're kind of at the mercy of what's happening in the entire world. So if you would have picked a US fund, and I don't have it pulled up on the screen, but US funds definitely did better throughout these 2 years. But once again, you're kind of at the mercy of that US market. So if the US market doesn't perform well, it kind of just depends. So these globalized funds are definitely good for people who want less risk, and they kind of want like a fund that's kind of more geared towards the long term of investing. That's definitely why these funds are really good to get started with. And if we go down to the portfolio asset allocation, we can see what actually the holdings are in this fund. And once again, guys, all this information is on the Vanguard website. I'm just kind of scrolling down here and it's nicely laid out. So we can see here that it's 80% stocks, and this isn't surprising since this is a growth-based fund. Whenever you have growth-based fund, we want more stocks because stocks grow more over time other than bonds. And the bonds here are more like just to kind of balance things out. It's got 20% bonds, which is pretty, I would say pretty, once again, on the high risk, but the bonds are just there to kind of balance things out. And whenever there is like a big crash in the market, like let's say stocks, have a really bad, well, I should say a bad initial year, like in 2020 when the market crash happened, bonds kind of go up to kind of counterbalance that, and you do get that fixed income from the bonds. So it's just another way of diversifying the portfolio and getting that more consistency across the board. So we have 80% stocks, which is pretty high on equities, which is going to give us that growth, and then some bonds, which is going to help balance things out and give a little bit of distribution as well here. And if we go down here, we can see the number of stocks inside the portfolio. So this is a pretty big fund, and this is the cool thing about these funds is you literally buy it with a click of a button, and you're now diversified across 13,000 stocks across the world. So that's really as simple as it is, as you guys can see it, and that's why these funds are super popular. And if we go down to the bond section, we can see once again that the bonds are pretty much diversified the same way. We have 17,000 bonds inside this portfolio, so lots of global diversification. And that's why a lot of people say if you're ever worried about diversifying your portfolio and you don't know what to do, just look at some of these all-in-one base ETFs, and this ETF is definitely one of those ones to take a peek at. Now going downwards, we have these different ETFs in different sectors. So if we were kind of assess each individual ETF, we have the US Total Market Index ETF. So you can see that this fund is kind of heavily weighed on the US markets and the Canadian markets, which is what I really like. I think for most Canadians, you kind of want to focus on US markets because that's when you're going to get a lot of growth. And the Canadian markets also because, it's in your home country, you have the home currency. And also Canada does have a lot of good growth and / dividend-based stocks. So, if you're a dividend growth-based investor like myself, a lot of Canadian stocks are really good for that. So I really like this fund that they do that. And if we look at the North American All Cap Index, we have 16%. And then we have some Canadian Bond Index. And then we have some emerging markets, which might be some European countries, some Asian countries. Then we have a global index and another US index at the bottom here that are hedged. So once again, you're getting mostly US and Canadian based diversification with a little bit of global diversification mixed in there just for that extra little bit just in case. And market capitalization is basically telling us what are the type of companies that are held inside this fund. This basic ETF basically has 81% large big cap companies, and I'm a big fan of big cap companies because they have a lot of money, they have a lot of growth, they have good strong history, and they show us that they're good investments over time. So the fund has 80% large cap. I'm a big fan of that. So you're investing into good quality long-term companies. You have some medium ones, you have some small ones, and then you have some small caps, which is a small percent, and this kind of would represent some of that big aggressive growth. So that's good as well. It's nice to have a balance of everything. So I really like the market capitalization, and I do like the fact that it focuses on large caps. And I think this is really important for people who are like just beginners or you want to kind of just have an easy solution. I would definitely invest in some of these big cap companies. And if you're going to want to get really specific here with each country that you're holding in, here's some more information about it. So as you guys can see, once again, the US market is going to be the biggest percentage of this fund. And a lot of these funds do this. And this is because the United States of America really does represent a huge chunk of the stock market. Coming in at 42%, we have 30% Canadian, and then some other countries here. So the global diversification of this portfolio isn't huge, but it definitely is there. And this is for the stocks, and we can go over to the fixed income as well. And you see the fixed income is once again focused on Canada, United States, and then some other countries here underneath. So once again, you're getting a lot of exposure to North America, Canada, and US, which is really good as a Canadian investor, but you're also getting a little bit of trickle exposure to different countries around the world. And one thing I'm a big fan of with this fund is that it actually has very good sector diversification. When it comes to Canadian stocks, one of the biggest issues we have for Canadian stocks is the fact that we have a lot of finance-based stocks. And one of the big issues for US stocks is they have a lot of tech-based stocks. So the nice thing about this fund is it has a nice diversification of everything. So it has a lot of financials at 20%. We have technology at 20%, which represents about 40% of the portfolio. And then the other 60% is consumer, industrial, healthcare, basic materials, energy, and then some other things here. So that's really cool. It even has some real estate in there. So a little bit of everything you're getting with this fund. And I do like the fact that you're getting nice sector diversification, which can be a big problem with some different types of portfolios. So I like that nice sector diversification across the board. And once again, you're going to see that with most of these funds. And we can even take a quick peek at the stocks and holdings inside the portfolio, which is really cool as well. So these would be the stocks that are held inside those different ETFs that we took a peek at earlier. And we can see that here's some different weightings here. So I think this is based on percentage. Yeah, it looks like the highest ones are at the top here. So Shopify, Class A is number 1. And Shopify is a digital good. So that'd be 1.8% of the portfolio. We have Apple, Microsoft, RBC, TD, Amazon, Enbridge, Bank of Nova Scotia, CNR, and some other ones here. So it just keeps going on. And you can see you can explore and take a peek at all 13,000 or 13,000 of the different holdings if you guys want. But as you guys can see, there's tons of diversification. And the cool thing about this is you can see it really is built from a Canadian perspective because we have Shopify, which is a Canadian company, being at number 1. So once again, it's a really good fund for Canadians who want to kind of get like that nice US exposure, but also get a little bit of exposure around the world as well. So if you guys want to take a peek at that, you can. There's also the fixed income side of things. You can click on the fixed income. I'm not super familiar with most of these bonds. You can just see that they're government bonds, a Vanguard market liquidity fund, whatever that is, and some other ones here. So you can take a peek at the funds as well if you guys want. So just really quickly, guys, before we end the video, I just want to do a quick little recap when it comes to owning these one ETF portfolios. So a lot of people ask me, who should buy these ETFs? Well, it really depends on what type of investing you want. If you want to have like a more active type of investing, or if you want to be more passive, there's a couple of different ways you can do it. If you want to be passive, you could go down the robo-advisor route, and that's super cool. But keep in mind, you will be paying for a fee. Now, if you want to kind of knock off that fee and you don't mind kind of doing a little bit of research to learn about a type of fund like maybe VGRO or something like, or some single portfolio based fund, you can buy these ETFs yourself. You can knock off that Quest Trade fee, and you'll kind of be able to do a little bit of work yourself, but really the only thing you have to do is go into your brokerage, click that button and buy it whenever you want it, and that's pretty much it. So they're very simple, and if you guys want to kind of knock off that fee of using robo-advisor, you can definitely pick into some of these funds. Now, if you're like myself and you like to kind of dive a little bit deeper and do a little bit more customization in your portfolio, I still use ETFs. I kind of base my portfolio off the Canadian market and the US market. Over time, I will diversify more broader based, but in the beginning, I kind of want to focus on these markets because I do believe that the US market and the Canadian market are some of the biggest markets out there in the world, and they really are. So it really depends on what you want, what kind of growth you're after, what kind of risk you're kind of going for. But these one ETF portfolios are super great, they're super safe, and they're really good for long-term investing. So it's really up to you guys and how you want to do it, and that's basically my recommendation. Do what you guys think and kind of approach investing from the perspective of what you want to get out of it, but also approach it on what you're willing to put into it as well. Alright guys, this is it for today's video. So if you guys have any questions or anything like that, like usual, please let me know in the comments. I'll get back to them as quickly as possible. So let me know what you guys think. If you guys enjoyed the video, smash the like button and subscribe to the channel if you guys want to see more videos. Take care, have yourself a good week, and I'll see you guys later.